Hello classmates, good afternoon, and I am Christian Q. Quinones, and today our group will tackle about clearing and settlement systems. Yes, this chapter is obviously contains a number of clearing and settlement systems na ginagamit for both electronic and check payments na within sa US. And this chapter will also tackle those multi-currency clearing system. But first, let's define what is clearing and settlement. So, clearing is the process of sending out, reconciling, and in some cases, actually confirming payments, or it could be even transferring funds prior to the settlement taking place. Whereas when we work with settlement is the actual transferring of final payments between two parties involved. So para mas masabtan, clearing is the process of determining the obligations kung sino ang naibayaran o kanino man magbayad. And ang settlement is the process of actually fulfilling those obligations. So, the treasurer should be aware of these processes in order to understand the timing of payment transfers.
In clearing and settlement systems, the banks of the payer and the banks of the beneficiary exchange information regarding monetary transfers. The result of this exchange is payments between the banks. The banks, in turn, debit the account of the payer and credit the account of the beneficiary. Given the massive volume of such transactions, formal clearing and settlement systems have been installed to streamline the process. Clearing and settlement systems are generally organized around individual countries or economic regions. Banks located within these areas can have an account with a local clearing and settlement institution. So, settlement takes place between the accounts of the banks held at the clearing institution. Banks located outside of these areas do not have such an account, and so must use a local bank as a correspondent bank that handles payment instructions on their behalf. There are two types of clearing and settlement systems. First is the settlement types. Payments can be on a gross basis, where each bank pays the total amount owed. Payments handled through a gross settlement system are more likely to have a requirement for immediate execution, where payment instructions are processed separately for each individual transaction. The cost of gross settlement transactions is high, so individual transactions running through these systems tend to involve larger amounts of funds or be very time sensitive. Payments can also be on a net basis, where a large number of transactions are accumulated and offset against each other, with only the net differential being transferred between banks. Payments handled through a net settlement system usually waits until the end of the day, when all transactions between the banks are summarized and offset against each other by a clearing institution. The clearing institution then sends the net transfer information to the settlement institution, which executes the transfer of funds between banks. The cost of net settlement transactions is low, so lower value transactions are usually settled through these systems. Banks prefer to use net settlement systems because payments processed through them require greatly reduced funds transfers and therefore considerably less liquidity than gross settlement systems. The second type is the transaction types. Each clearing and settlement system is primarily designed to handle a certain type of transaction. One such type is the high-value payment, which must be executed immediately. Because of the time constraint, high-value payments cannot wait for end-of-day netting, and so are settled on a gross basis, with an immediate cash transfer between banks. Another type of payment is the low-value payment, which does not require immediate execution and tends to be for smaller amounts. Because of the reduced need for immediate execution, these payments are handled through a net settlement system.
The Fedwire Fund Service is a credit transfer service in which participants originate funds transfers by instructing a Federal Reserve Bank to debit funds from its own account and credit funds to the account of another participant. So first is the payer company. The payer company instructs its bank to send funds to the beneficiary company. So the payer's bank is responsible in sending the funds to the beneficiary bank through the Federal Reserve System. And then the Federal Reserve System debits the account of the payer's bank and credits the account of the beneficiary's bank. And the beneficiary's bank credits the account of the beneficiary company. So the beneficiary bank is also responsible in notifying the beneficiary company about the transfer. And the beneficiary company is the recipient of the fund that came from the payer company.
As more and more checks are being converted to electronic transactions, the ACH volume is steadily growing, especially with the introduction of same-day processing. Consumers and businesses are also being introduced to many ACH types of ACH products and services. So it's wise to understand the ACH network. Thus brings us to the question, what is ACH? ACH is an acronym for Automated Clearinghouse. In a nutshell, it is a nationwide financial network for the distribution and settlement of electronic transactions among financial institutions. The transaction can be annexed, a settlement, or same-day settlement, and there is a set of rules and formats allowing the exchange of transactions. An ACH transaction is an electronic transaction that can be either a debit or a credit. It can be a large dollar item or it can be small in its value. It can also be posted to checking or savings directly to a loan. An ACH entry can be initiated in or directed to a consumer, corporate, or government transaction, and it can be single or recurring. Some examples of credit for consumer transactions are payroll, CD interest, dividends, and pensions. Some examples of debit to a consumer account will be insurance, mortgage, and loan payments. It can also be at point of sale, internet transactions, telephone transactions, or converted paper transactions. Some examples of corporate transactions or company-to-company transactions include intercompany payment, state taxes, federal taxes, like some consumer transactions. Corporate transactions carry addenda information and they are generally large dollar transactions. Let's take a few minutes now to look at what isn't an ACH transaction. Wires are not ACH transaction. Wires follow different regulations and guarantee funds same day, usually consist of high dollar amount and are single payment. Some other payment methods that are not ACH are debit cards, simply because we can use them offline and it requires a network and proprietary rules. Credit card because they're a line of credit, and ATM because they're card-based with a PIN and are usually online. Now that we have defined ACH and understand why we need to know about it, let's look at the participants. We have what's called an originator, originating depository financial institution, or ODFI, ACH operator,
Receiving Depository Financial Institution, RDFI, and Receiver. An originator is a party which initiates the ACH transaction. Again, it can be a company, government agency, or a person. The originator is the party which obtains the authorization from the receiver. The ODFI is the institution which originates the ACH transaction after receiving payment instructions from the originator. Keep in mind that for transactions to enter the ACH network must be done by a financial institution. An ODFI must also act as an RDFI, or Receiving Depository Financial Institution, in the event of a return. The ACH operators are clearing facilities for the financial institutions. There are two ACH operators that participate in the ACH network: the Federal Reserve Bank and the Electronic Payment Network, although both can be involved in the transaction. The main ACH operator is the Federal Reserve Bank. The next ACH participants is the RDFI. This is a financial institution which receives an ACH transaction for posting to a receiver's account. An RDFI does not have to operate as an ODFI. The receiver is a party which receives the ACH transaction and has authorized the originator to initiate the entry into the network. This screen denotes the flow of an ACH transaction, understanding that it starts with the originator and ends with the receiver.
Hello classmates, this is Crystalline Q. Quinones again, and I'm going to discuss the Clearinghouse Interbank Payment System, or in short, CHIPS. So what is CHIPS? CHIPS is also a net settlement system nga pareho sa automated clearinghouse system. And CHIPS is also a largest private sector US dollar-based money transfer system sa US. Like what I've said, it is privately operated and it is a bank-owned. And nagasettle pod ang CHIPS ng foreign exchange and euro-dollar trades. CHIPS are also designed para sa mga high-value payments. And then CHIPS can